Started here. Welcome everybody to the VSI Pro webinar, where we're going to be discussing how to make, or how the VSI can help you become a better trader. My name is Thomas Wood. For those of you that don't know me, I'm a partner here at basecamptrading. I also run the futures trading room. So many of you have seen me in there. And before we get started, the first thing I want to do, I just want to thank, I know I'm seeing a lot of people here that are members, and I want to take a minute just to say thank you all for being here, joining us, being active in the trading room, being active in the members chat, and letting us serve you and helping us build a community of profitable traders, because that's what we're all about here. And that's what I'm passionate about, is helping make a difference in traders' lives. And I'll explain to you a little bit more about my background here in just a minute and why that's what I'm working towards. But thank you all for being here. Just a shout out to all our members that are with us. And if you're not a member, thank you for joining as well. Hopefully you will learn something tonight. I always try to teach people more. If you're going to spend time out of your day to spend with me, or take time out of your day to spend with me, I'm going to try to make sure I help improve your trading in some aspect. So I'll try to teach you as much as I can in the short amount of time that we are together. Now, with that being said, before we get into the good stuff, we have to go over the risk disclaimers. Trader investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. This content is subject to change at any time without notice and is provided for the sole purpose of education assistance, making independent investment decisions. Basecamptrading.com is taking reasonable measures to ensure the accuracy of the information contained herein. However, Basecamptrading.com does not guarantee its accuracy and is not liable for any loss or damage that may result directly or indirectly from such content, from an inability to access such information, or delay in or failure of the transmission, receipt, or instruction or notification in connection therewith. Any past performance results shown for illustration and example only are hypothetical and as such have many inherent limitations. No presentation is being made that the account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. And then along those same lines, we are required to show you CFTC Rule 4.41. Hypothetical disclaimer saying, look, if we're showing you examples from the past, obviously there's no guarantee that they're going to happen again in the future. Now, that being said, for those of you that are members, you already have heard me say this many times. We trade every day in the trading room, trade live money. I wouldn't be putting my money on the line if I didn't believe it would work. Also, I don't ever sell anything or teach anything that I haven't thoroughly tested myself and made money with trading myself. So I don't think it's right for other educators. There's a lot of educators out there, they go out and they don't even trade live, or they trade simulated and expect you to come in and follow them and take trades they're not even willing to put their own money on. So with that being said, for those of you that don't know me, my name is Thomas Wood. This is me right here, my beautiful wife Dora, and our lovely little dog Merlin, who's not so little. One thing I always have people tell me when they see my picture is, wow, Thomas, you're really young. And I say, yeah, I'm pretty young, but I've been fortunate enough to have been trading since I'm about 13 or 14 years old. And I've already spent more time trading real money than most people will in a lifetime. All right. The whole reason I got started in this education industry and helping other traders become successful is my dad's the one that actually got me started in trading. And when he first started trying to learn how to trade, he lost hundreds of thousands of dollars following these quote unquote gurus out there. And, you know, I didn't think that was right. And I wanted to be the exception. My dad told me, look, if you're going to do this, you should actually go make a difference and treat people right and practice what you preach and be the exception to the rule for this industry. So that's become one of my goals. One of the things I'm passionate about doing, one of the things I strive to do, is actually make a difference in people's trading and actually help traders become more successful and take something that everybody considers really hard or difficult, like trading or Wall Street or investing, and turn it into something simple and explain it in ways that anybody can hear and understand. And I've worked with ranging from multi-billion-dollar funds doing education and teaching them how specific ways to trade with strategies that we use and tools that we use, all the way down to working with retail traders, trading just a couple $1,000 accounts, and help people go from a normal person with a $10,000 or so account trading into trading a six-figure account, trading for a living off of their profits. So worked with a wide range of people, been really fortunate enough to do that, and fortunate enough to be in the position I am in to actually help people. Now, for those of you that don't know, I don't normally like spending a lot of time about me personally, but this is, for example, a broker statement of mine from the past, from one of the accounts I was trading in the past. showing about $38,000 in gains. This is from one day. It's not huge. It's not small. It wasn't the biggest gains we've had. It wasn't the smallest. This is my equity curve from 2017. Oops. 2017, if I could draw correctly. And it's actually, this is from a few weeks ago, so it's even higher than that now. We've been doing pretty good since then. But enough about that. Let's go ahead and jump in with the good stuff and talk about why we are really here. So what problems do traders have, and what types of problems do traders come with us and say, hey, look, I need help with this area? Okay, and I want you to think about this as well, because I want to ask you to tell me what problems you have the most trouble with here in just a second. But three of the biggest ones that we have, traders come to us and tell us that they're struggling with is A, timing entries, B, timing exits, so when they get out, not only when they get into a trade, but when they get out of the trade, and then C, taking a strategy and staying out of the bad trades with that strategy instead of just getting chopped to pieces. Because what happens with so many traders out there is they go through and they have a system that works and they go, well, look at this strategy and look at how well it worked here and look at how well it worked there and look at how well it worked here. But at the same time, they skip over the 15 or 20 different bad trades that took place in the middle between those really good trades. So they need help with filtering out those bad ones and only taking part of those really good ones. So when we develop an indicator, which is what we're going to be talking about today, I'm always trying to solve one or more of these problems. And we develop tools that are used to help do this, help you either enter better or exit better or stay in longer or avoid choppy markets and avoid getting beat up on trades. So with that being said, what do you need the most help with? Just a little future research here. What are you looking for help with your trading? What are some of the hardest things when you look at the trades that you've placed recently? You go back and you look at your equity curve, or you look at your trade log, which hopefully you're keeping a trade log. How many of you look at those trades and you go, you know what? I wish I had never taken some of those. How many of you go back and you look and you go, man, I was doing really, really well, and then all of a sudden I blew up my account, or I had 25 winners in a row, and then the next thing I know, I lost all of those gains and more on one or two bad trades. Couldn't see, says John. All of the above, says Herman. Timing. Wayne. Timing on the entries, says Fred. Yep, says Robert. All of the above. Risk management. Avoiding bad trades. Staying out of bad trades and revenge trading. Absolutely, Andres. Revenge trading is a big one. That lack of discipline. It's hard for me to stay in a trade because I do not want a loss. So fear of losses. That's another big one that we get a lot. Entries and stops. You got to keep in mind, by the way, in regards to fear of losses, remember, nothing's for free. All right. There's inherent risk involved in trading. It's trading. You got to risk money to make money. There's really no such thing as a risk-free trade. Okay. So you cannot be afraid of losses. That's why I always tell people, look, trade with risk capital, money that you don't need, that it's okay if it's gone. And then when you put it in your account, write it off as gone already. That way, when you're trading, your mind is not focusing on, man, I got to make this work. I got to make this work. It's focusing on, man, I got to follow my rules. I got to take the trades I'm supposed to take when I'm supposed to take them. I got to put my stop where it's supposed to go when I place the trade, not because I'm afraid of losing it. And there's a whole lot more coming in. I'm sorry if I don't go through everybody's. But how many of you look at your trading and you go, you know what? I know there's something missing, but you can't quite put your finger on what it is. You go, there's some aspect of my trading that I feel like if I could just get this right, if I could just find this one thing that would fix all these problems, or fix the thing that's keeping me from making this consistent, that you'd be good to go. Okay? So let me tell you a question that I ask myself whenever I'm going to look at a new tool that I'm considering using with my trading. Okay? What should all the indicators and all the tools you use do for you? All right? And if you can't look at it, and I'm telling you to do this to what I'm going to show you today as well. Okay? Because some of you guys are gonna look at the tools today at the VSI and you're gonna go, man, that's a great tool. That's gonna help me. I'm gonna use it right now. And you're gonna be on board, and that's great. Some of you are gonna look at it and you're gonna go, you know what? I don't really like trading that way. It doesn't fit my style, and that's perfectly fine. I don't ever want to force somebody to get something that they don't think is gonna help them. All right, and some of you are gonna be on the fence and in between. And I want you to make a decision. Don't be that lukewarm person that goes, well, yeah, maybe that could possibly help me. I see the results it's getting. I see the tools that are the people that are using it successfully. I see how that could work, but yeah, I'm just not ready to make a commitment. Because if you're not willing to make a commitment and actually make a change, then you're never going to get there. Okay. So what's the one question you should be asking yourself whenever you look at an indicator or a tool, or you consider adding something to your trading? Well, number one, you need to have that indicator. It needs to do one of a couple of things. It either needs to be increasing the balance between your reward risk and your percent win, aka it needs to make you more profitable or smooth out your equity curve. All right. Or B, it needs to simplify your analysis. So it needs to make your trading easier on you. It needs to call out the setups for you better, make it so that you can more quickly analyze a market, decide on a trade, and then place that trade and execute. All right. And if the tool that you're looking at doesn't make you more profitable, decrease your risk, or smooth out your equity curve, or simplify your analysis, if it doesn't do one of those things, then get rid of it. Okay. There's so many tools out there that really serve no purpose other than to distract us from what the market's actually doing. And I work with traders, even people managing millions of dollars, and you'll pull up their chart and they'll show me their screen and I'll say, what in the world are you looking at? Because they'll have 20 or 30 different tools on there. And they go, yeah, I don't really know what the price action is doing, and I had so many conflicting signals that I just didn't do anything, or I just guessed. And I say, well, then we need to start cleaning this up. All right. Because anytime you add a tool or an indicator to your trading, it needs to serve one of those purposes: increase reward risk, percent win, simplify your trading, or make your analysis quicker, easier on you. All righty. So what are we going to be learning in today's presentation? What are we going to be discussing? All right. Well, we're going to talk about what is a traditional RSI indicator, and then how is the VSI better? Because we took an RSI and we've enhanced it, and I'll explain to you what we did to it to enhance an RSI. We're also going to talk about identifying market turning points with the VSI and how we do that, what we're looking for, how this tool is used to help us find extended markets that are getting ready to roll over. We're going to talk about entering into trends with price action and the VSI. So combining price charts and then using them and the indicator to time entries. And then we also talk about using VSI trends for exits and entries as well. All right, and today we're going to cover all this stuff, which is good information that's going to help you. Like I said, whenever I teach something, whenever you're taking time out of your day to spend with me, I'm going to try to help improve your trading as much as I can. But ultimately, you got to remember, real change only comes over time. It's not going to be an instantaneous flip the switch and, wow, I just went and listened to Thomas and now I'm a millionaire, right? But by the end of the webinar, you're going to have a good foundation to build on. And we'll show you how, if you're ready to take the next step and move forward, how you can get the indicator in the workshop that's going to discuss in even more detail how to use these tools for both futures, options, and equities. And the timing of this is going to be right for a lot of you. And if it's not, that's perfectly fine. Once again, I don't want you to feel like you have to take a step forward. You need to do what's right for you in your trading career. All righty. So what is a traditional RSI indicator? So first, let me lay the groundwork of what RSI does, because it's pretty simple, but it's actually a really effective tool. The RSI, also known as Relative Strength Index, was originally made by Wells Wilder. All right. It's one of the most widely used momentum indicators out there that is showing helps identify overbought, oversold markets as well as market momentum. It's considered a momentum oscillator, which means it goes up. All oscillator means, for those of you that don't know, just means it goes up and down like this. Okay. It doesn't just continue to climb or continue to go down. It oscillates above and up and down. Alrighty. So pretty simple. It's considered a momentum oscillator that's measuring the magnitude of recent gains over the magnitude of recent losses over a given period of time. All right. And it's calculated that the math behind it is RSI, so indicator line, equals 100 minus 100 divided by 1 plus RS. And RS stands for relative strength. And RS is calculated by taking the average gain of the up bars during a given period divided by the average loss of the down bars during a given period over a specified period of time. Okay. So pretty simple math behind what RSI is. Again, 100 minus 100 divided by 1 plus RS. Alrighty. Now, the VSI, what we've done with this is we took that simple concept, and we took that original idea that Wilder had, but we enhanced it. All right. And we added both a volume and a momentum trending component to it to help increase the accuracy of the timing. Alrighty. So if you think about it, the VSI Pro, when we're looking at this and we're reading this indicator, this tool, it's an oscillator plotting a market's movement on a scale of 0 to 100. Okay. If the market, traditionally speaking, if the market's trading above 70, it's considered overbought. If it trades below 30, it's considered oversold. The VSI is going to show you when a market's trading at overbought and oversold, but then it's going to also analyze the volume of that market, and it's going to tell us when market volume starts to dry up. So if you think about when a market is rallying or when a market's selling off, what's causing that? Well, there's either a lot of buyers coming in pushing prices higher, or there's a lot of sellers coming in pushing prices lower, right? So when does that market start to change? Well, normally, now not always, because nothing's 100%, but normally before a market starts to turn around, you see volume start to dry up. So it'll start climbing and then volume will die off and then it'll turn around and come back down a little bit. Or it'll go down and the volume will dry up and turn around and start going back up, right? So this is when you often see these major turning points take place. So what we're doing with the VSI, which stands for Volume Strength Index, by the way, is we're looking for this market to get overbought or oversold. Then we're looking for volume to start drying up. And when that volume starts drying up, then it's going to say, hey, look over here. Volume's drying up and this market's overbought. Watch for it to retrace. Or, hey, it's extended to the downside and volume's starting to dry up. And then we're looking for it to turn around and start climbing back up. Okay. Now, it also shows you, the other thing we've added to it is the trend of the momentum line. Okay. So if you look at the VSI, and I'll show you here in just a second what it looks like, it's an indicator line. Again, it's an oscillator going up and down. All right. And we're going to show you the trend. And the way we did this is we colored the line green for bullish or red for bearish. And the way we analyze whether or not it's bullish or bearish and what the trend is, the math behind that is we take a moving average of the indicator line and then we apply a, linear regression line. Drew a blank there for a second. We apply a linear regression line to it, and then we judge the slope of that linear regression of the moving average of the indicator line. And then that helps us determine whether or not it's climbing or selling off. Okay. So this is what it looks like. This is what we're going to be looking at when you're seeing the indicator. It's pretty simple. First thing you're going to notice are these lines here. Okay. And you can see the arrows pointing to them, but I'll draw some more. We have our overbought line. Right there at the top. We have oversold at the bottom. Alrighty. And then we have our retracement line in the middle. Now remember I said it's an oscillator, meaning it goes up and down and up and down. Well, the middle line is what it's oscillating above and below. Alrighty. So keep that in mind. It's also a target that we use for retracements. So first thing you want to notice is overbought line, oversold line, retracement line. All right. Second part of the indicator that you're going to want to look at are what we call volume strength dots. Okay. And this is again designed to help you stop buying from the top, because a lot of times traders come in to get into a trade only to immediately have that trade turn around and go the opposite direction. By the time they finally pull the trigger and say, oh man, this market's running away, I'm missing it, they jump in and then it immediately turns around and stops them out. And this is going to help keep you from buying extended markets or selling significantly oversold markets. So now the volume strength dots, what they're looking at, that's where you see that little dot right there, the little dot right there, or the little dot right there. Remember how I told you it's looking for overbought or oversold condition where volume dries up? That's what this is. This is looking at the overbought and oversold condition, and it's saying, hey, pay attention, volume just died off. All right? And again, it's looking at current volume as opposed to what the volume was on the rally. So it's, again, looking for a market that's run, and then current volume starts to dry up, and then it's going to alert you to that condition. All righty? Now, the last component that you want to pay attention to, once again, pretty simple, pretty easy to understand, is the coloring of the VSI Pro indicator line, okay? Green is bullish, red is bearish. Now, you don't want to just blindly say, hey, indicator line is bullish, so I'm going to buy it. Or, hey, indicator line is bearish, so I'm going to sell it. I will talk about how you use this here in just a little bit. But this is, again, helping us determine the trend or the directional strength or the momentum of the line, okay? It's a fast-moving trend, basically. All righty? Now, one thing I will tell you, there's a lot of questions coming through. There's a lot of people in here. If I don't answer your question, I apologize. At the end of the presentation today, I'm going to pull up live charts, and we're going to look at whatever markets you guys want to look at so you can see it and see that I'm not just cherry picking examples. And I'll do Q&A while we're doing that as well. So I will be answering questions at the end once we get past everything. All righty? So setups that we use the VSI Pro for. So now that you understand, this is what the indicator looks like. All right, and it doesn't really matter what type of trader you are, whether you are a trend follower, a breakout trader, a counter trend trader, if you like fading the market or trading with the trend or trading futures or Forex or equities or options. I'll show you examples of all of the above, all righty? And you can use the VSI to enhance your probabilities of success, all righty? Now, although there are a lot of different ways of using the VSI, we only have a limited amount of time tonight. We don't want to keep you here all Sunday night, of course. So we're going to focus on a couple of them in today's webinar that are really powerful. All right, the VSI Pro, it's a pretty versatile indicator and can be used for all the following strategies. You can look for divergences, overbought, oversold, trends, topping and bottoming patterns, momentum confirmation for breakouts. So it's a very useful tool in a lot of different ways. And we'll talk about a lot of that in the workshop. But tonight we're going to talk about 3 of the main ones. Alrighty. So number 1, what we call a volume reversal. And you've heard me talking about this in the trading room the past few days because it worked brilliantly on Friday, especially. And saying bonds should go down, gold should go down, and crude should go down. And bonds, gold, and crude all went down. So this is one of the simplest ways of using the VSI Pro. And it's designed to help you identify market reversals or time turning points in order for the setup to be valid. So in order for us to look at this and say, all right, it's time to take action, we need to look for a few different things all to occur simultaneously or to happen back to back to back. All right. First thing we're going to look for, the indicator line needs to be above or below the upper and lower level limits. Those significantly overbought or oversold levels. Remember, it would be plus 70 or plus 30, below plus 30 or above plus 70. Alrighty. Now, the volume dot then needs to appear, signaling a decline in volume. So we want to see a market that's gotten extended, and then volume starts to dry up out of that market, and it starts losing its strength. Okay. Then we want it to trigger, because there's always at least 2 parts to every trade. There's a setup, why we think it should go up or down, and then there's a trigger, why we should actually get into the trade when we actually decide to place the trade. And the trigger for this is going to be the break of the previous 1 or 2 bars low if it's bearish, or high if it's bullish. All right, that's very important. Has to trigger. Stop is then placed above the high or below the low of the move, and the market should reverse fairly quickly within just a couple of price bars. Alrighty. Yes, it works on tick charts, and I'll show a lot of different time frames and markets here as well. So let's take a look at how this works. This is Friday's price action. This is in gold, and I'll show you the 240-minute setup that was in gold that we were talking about in the trading room. But this is on a tick chart. So great question, David, because the very next slide talks about what your question was. Does it work on tick charts? So here we go. We have a 500 tick gold. We jump. You can see prices jump, market jumps, and then we start getting Our blue dots right here. Remember, what is that telling us? We're overbought. We're extended to the upside. Okay. And volume's drying up. Market is losing its strength. Alrighty. And this is a great way of trading for those of you that are looking at fading big moves. For those of you that go, wow, that market just took off, it's got to retrace. Because remember, a lot of times the faster market rallies, the faster it's going to pull back. Or the faster it sells off, the faster the bounce is going to be. So for those of you that are going, I love trading counter trend, I love fading big moves, this is a great way to do it. We look for it to get extended, we look for volume to dry up, and then you look to sell when it breaks the previous 2 bars lows. So you'd sell right here because you broke bar number 1 and bar number 2. Both are low, your stop goes above the high, and we look for it to accelerate our direction. Boom, we accelerate right back down. Okay, same thing here, once more, we get extended. Alrighty, overbought. Market has rallied too far, further than it normally does. Volume dries up. Once we start seeing those dots, we start looking for it to break the previous 2 bars lows. So you'd be selling right there once it breaks the low of the past 2 bars. Stop goes above the high. Boom, accelerates down. Now with this time when it accelerated lower, okay, we got extended to the downside. You can see extended with lower volume there and there. Now, this is why it's important for it to trigger. You first got extended right there. Now, what was the trigger? It has to break the high of the previous 2 price bars after it has gotten extended. It never does that. Okay, especially, and the reason we go with 2 is because this is on a 500 tick chart. It's a very short-term chart. There's a lot of price bars generated. The longer the time frame, you could switch it up to a 1. All right, and if you really want to play it safe, you could say it needs to break the high or the low of the past 3 price bars. But we got extended there and we got extended here. So once it gets extended and volume starts to dry up, look for it to break previous bars, 2 bars highs, and then buy, stop at the low, and then boom, we accelerate right back up. Okay, worked out. This is, again, it worked out perfectly. Here, this was gold. This is on Friday, again on a 500 tick chart. And I'll show you once more at the end of the presentation. I'll pull up some live charts because I don't want you to think I'm just cherry picking examples. And I'll show you wherever you want it to be or whatever markets you want to look at, right? It will help. This is a great way, great tool to use to enhance your strategy by adding a timing filter and making sure that the market confirms your thoughts that it's extended before you actually place a trade. Okay, so instead of just going, oh, that's extended, I'm going to sell it, it's saying, hey, it's extended, and now your timing is right. Now it's time to take action. All right, so when you're using the VSI, when you've gotten the VSI and you're looking at it and you're looking to place trades, it's going to help you from entering these trades too soon. For example, going, oh, wow, we got way extended over here in gold, and you sell it there only to have it continue to climb and stop you out and then be right on the trade. All righty. So let's take a look at another example. This is in Tesla. This is on a 500 tick chart. Once again, looking intraday. And I have a lot of different time frames and markets in here. So we'll look at some longer time frames as well for those of you that do longer time frame trading instead of day trading. So I want to point this out to you because nothing is 100%, as I mentioned before. Right? The thing you got to keep in mind with trading, and the thing that sets apart winning traders from losing traders, is risk management and controlling those losses. You got to understand, losses are going to happen. All right, it's part of trading, part of playing the game. You got to risk money to make money. But that being said, we can control them and we can minimize our losses and maximize our returns. Okay, so for example, we get extended right here. We're extended to the upside, volume dries up, it triggers right there. It doesn't sell off, it starts to bounce. You're right back out immediately. Anybody that tells you that their strategy never loses or anything like that, they're full of it, and you should run away as fast as you can. All right. Again, it's all about controlling those losses and moving on. Another thing that separates good traders or long-term successful traders from those that blow up or don't last in this industry is you understand the fact that losses are going to happen, and then you don't let them affect you. Meaning, let's say you take a loss on your last trade. You don't let that loss on the last trade affect the way you trade your next trade. So one thing I see happening all the time, this is a big mistake that traders make because it hurts their reward risk ratio, is they might have had a $100 loss on trade number 1. So on trade number 2, once they're up $110, they take profits because now they're out of the hole. Well, the problem is trade number 2 might have been a good opportunity to make $400 or $500, but they cut it off quickly at 110 just because they wanted to get out of the hole. And they wanted to say, hey, I'm up for the day, $10, woohoo, big whoop. All right, so you messed up your trading going forward because you let that first loss affect the way you traded your second trade. And you cannot do that as a trader. Treat each and every trade individually. And if you learn nothing else here tonight and you go, I don't want your indicator, Thomas, it's crap or something else, that's perfectly fine. But you got to understand that. Alrighty. That's a universal rule for trading. Don't let your losses affect the way you manage your next trade. Treat each trade independently. All right, your next opportunity here, though, we get extended, and then we trigger, and then we start to pull back, and then trend changes. We start putting in lower highs and lower lows, and the market starts selling off. Alrighty. Then the next opportunity you're going to have, we come down here, and we've just dropped through the floor, and now we've gotten extended, and volume dies up here. It then triggers a reversal, and boom, right back up we go. Once more, next day it opens, and then it starts dropping immediately, extended, small retracement, then we drop again, extended, volume dries up, triggers again, trend change, back to the upside, extended, trend change, back to the downside. Okay. Lots of people say, that's me. Yeah, cutting off those winners because you want to cover that one loss. Yep. You cannot do that. So again, if you don't take anything else from today's webinar, remember that one rule. So here's the next example. This is the yen. This is on a daily price chart. All right. So here we go. We get extended to the upside. Volume starts to dry up. Now, the longer the time frames we have, okay, the longer the time frame we're analyzing with this tool and with any strategy really, the bigger the expected move once that setup triggers. So if we're looking at a daily, obviously we can expect a much larger move in the opposite direction. Now, why is that important? Because if we have a daily setup that's triggering, that means we can go intraday, trade in the direction of that daily setup, and we can maximize our returns intraday because we know a bigger move should be coming in the direction that we're trading. Okay, so you're kind of setting expectations for how your intraday trades are going to play out based on how the end of day setups are occurring, or what end of day setups are occurring. And that's one thing we teach all the time here at Basecamp Trading is what we call multiple time frame analysis. That's what you could be using here, and it's one of the ways we had the setups for the sell off in crude oil and stuff on Friday. Alrighty, so again, overbought, volume dries up. When do we sell? Once we break the previous bar's low, and then our stop goes above the high. How fast, how soon should that market move after it's triggered? Very quickly, within just a few price bars. So boom, we trigger, accelerate straight down. Perfect. That's a perfect example. By the way, this is just a screenshot of the daily from the past few weeks. I just pulled up the yen so I could show a Forex market, and it pulled right back down. All right, then what happens? We get extended to the downside. The dot right there tells us volume just dried up. So the whole time that market was selling off, it was good. Had a lot of strength behind it. Then it gets extended and it goes, oh, wait a second, guys, volume's dying on this market. What does that mean? It means watch for the turn to take place. Here's our trigger. Here's our long. Stop at the low. Within just a few price bars, it should start accelerating our direction. And boom, it starts to accelerate higher. And then what happens again? We turn around and come right back down. We get extended over here. Volume dries up. It triggers. There's our long. Now in this case, you have a hammer right here at the bottom as well. So you have an extended market plus lower volume plus a hammer pattern. All great things saying, watch this to start to accelerate, and then we accelerate away. Now, Ray, you asked a great question. You said, where is the target? So we've talked about where the entry is. We've talked about where the stop loss is placed, but where do we get out? Really good question. So you have a couple different options. Option A, you look for, what's that middle part called again? The retracement line. So you can use the retracement line as your first target. All right. The second option is you look for an extended market in the opposite direction. The third option is you use a trailing stop, and you trail it based on previous pivot highs or lows, or we do what we call a 1 or 2 bar trailing stop, meaning you trail behind the previous price bar's low or high as it continues to climb. Alrighty. Now, let's take a look at another setup. So that's what we call the volume reversal setup. Now, I know I'm moving pretty fast here, but it's already been 40 minutes. I'm trying to keep us on time. Alrighty. So the trend trading retracement line bounce. Alrighty. So we're looking at that retracement line. And this is a setup that's based on price action with an indicator confirming the setup. Okay. Now, the first thing you got to understand is the definition of a trend. We're not going to go into it in a lot of detail here. If you want to learn the definition of a trend using price action, go to our YouTube channel. There's a free video that's an hour long explaining how to read price action and understand a price action trend. But essentially what you're looking for is higher highs and higher lows for an uptrend using pivot points, or lower highs and lower lows for downtrend using pivot points. Alrighty. And again, that can be explained a lot better if you go watch that video. Just look up Naked Trading Part 1. It has like 180,000 views or something now. All right, once we have established a trend, we look for the indicator line to pull back to the retracement. Okay, so once we identify a trend that's taking place in the market, we then look for the indicator line to pull back to that retracement point, and then we look to enter after it tests the retracement point. All righty. So once we have retested the retracement line, we enter on a break of the previous bar's high or low, and once again we should see rapid follow through. All righty. So once more, the setup is retracement. The trigger is break the previous bar's high or low if we're bearish. So here's crude oil on 240-minute price chart. By the way, this was before the big sell-off we had on Friday, and this was the volume retracement setup, and we were looking at a pennant pattern here. Alrighty, and it broke out of the pennant with volume retracement confirmation, and it tanked, which is exactly what we wanted to see happen. If you were in the room, we talked about it as it was happening, and it worked out really well. So first off, let's identify the trend. Trend is down. We're at lower highs, lower lows. Market starts to bounce back up. What do we want to see? We want to see that market retrace back to the zero line, or what we call the retracement line. Once it tests that, then we can look for the break of the previous bar's low right here. And we're selling with our stop above the high. And then we look for, once again, immediate follow through and for the trend to continue. Same thing happens over here. First, we identify the trend. We go from higher highs, higher lows to a lower high, and we break to a lower low. So you go to a downtrend. Market starts to retrace. Once it retraces and we hit the retracement line right there, then we look to sell on the break the previous bar's low. In this case, you have what's called a shooting star right here, which is a bearish candlestick pattern. Stop goes above the high. And once more, starts to accelerate down. And then what do you know? We have the volume reversal right there at the bottom and right back up. Trend changes once again, back to the upside. We start to climb. We retrace, indicator line pulls back to the zero line here. Break previous bar's high. Here's our long. Here's our rally. Okay. Making sense? And then we get once more volume reversal at the top, and you know where crude oil's at right now. It's trading at 47.70. So it's all the way down there. So let's take a look at another example here. This is Google. So we're going to look at, once more, we're going to check out some futures. We're going to check out some equities. We're going to check out some Forex. But this is Google on a 30-minute price chart. So the last one was 240-minute. I'm going to look at a few different time frames just so you guys can see, depending on the way that you like to trade. And we start to pull, well, first off, we get volume reversal here and here. Okay, the first one right there never triggers because it didn't break the previous bar's low and just continued to climb, not until over here anyway. Then we start to pull back. Then you rally once more, volume reversal once more, and we start to pull back down. Alrighty, and for those of you that know what a divergence is, we're not discussing that today, but this is a perfect bearish divergence using the VSI. Alrighty, now trend changes to a downtrend. Put in lower highs, lower lows. We look for a retracement to the retracement line. Right there. Pull back to the retracement line. Sell after breaks previous bar's low. We should get immediate follow through, just like we do it goes all the way down to extended, and then starts pulling back up. Once more up here, you start getting extended to the upside with weaker volume, and then volume reversal right back down, volume reversal here, up, volume reversal here, plus bullish divergence, and back up you go. Alrighty. Let's take a look at one more example. This is gold on 240-minute chart. By the way, this is gold on Friday before we had our sell-off, or Thursday or Friday before we had our sell-off. And where you can see extended volume reversals here on the way up. First one, here's your retracement. Second one, here's your retracement. Third one, current gold price is 1341.5. So gold's down here. So worked out just like it was supposed to. Same thing here with the volume reversal there. And the ones over here, pulling right back down. But we're talking about the retracement line. So stop getting distracted, Thomas. We start pulling back down. Trend is up. We hit the retracement line. Once we've tagged the retracement line, then we look for a break of the previous bar's high for our long entry. And we should see immediate follow through back in our direction. Alrighty. Now again, one of the best ways of using this is for helping to keep us out of bad trades and helping to increase the probabilities of when a trade triggers, if we're getting into a retracement trade, that it actually, the trend is going to follow through enough for us to actually make money on it. And again, if we have the indicator confirming, we should see very rapid follow through, and it should start pulling in our direction very quickly. Sorry about that. Throat's getting itchy. So let's take a look at one more strategy before we run out of time here. The VSI Pro Regression Entry. Now this strategy is taking, you know how I talked about the indicator line? It's looking at the trend of the indicator line, or a trend of a moving average of the indicator line, and then looking at the linear regression and the angle of that linear regression line of the smooth indicator line, basically. This is using that function, the color changes of the indicator. That's all you really need to know. For those that are technical and want to know the math behind it, that's what I was explaining a second ago. But we look for a breakout that's confirmed by the regression line. So we're going to once more look at price action, plus we're going to look at the indicator to confirm. And then we hold the position until the indicator line changes in the opposite direction. Now, using this strategy, all right, because of the nature of the way the indicator is set up, if you're trading this, it's better if you use a longer length setting and shorter, what we call R and A lengths in the indicator settings. All right, this is going to smooth out your color changes and help you avoid some of the chop that takes place in the market. So again, if you're specifically going, I want to trade the regression strategy, all right, the VSI regression strategy, you're going to want to change your settings a little bit. The other stuff you can leave on default settings. Alrighty. So now with this is an example of bonds. This is on a 30-minute price chart. This is from just the other day as well. I tried using as recent of examples as I could. So this is Thursday and Friday. But right here, you see bonds we're trading. This is a setup from Thursday that we traded in the trading room. Worked out really well. This breakdown, but we had really well-defined support. Okay, really well-defined support here, where the market had tested that support level multiple times. Now look at our VSI Pro. You can see I've changed the settings a little bit higher. We're using a 30, 15, 15 on the setting, and I will, when we do the workshop for the indicator, for everybody that's getting it, I'll explain to you how to change these. Alrighty. But you can see going into this that our regression had changed and said, hey, you know what? It's no longer got the strength that it had on the rally. You can see back here, we changed to strong upward strength right there, and then followed through pretty well. Then we changed back to bearish strength as of this point. Plus we had the volume reversal there anyway. And now we have a bearish indicator line with a bearish breakdown. Okay, bearish indicator line, bearish breakdown. Market accelerates very nicely to the downside. Then what happens? We change it. It says, hey, we're now changing to bullish strength. All right, and what happens there? Well, we broke out of a channel to the upside, and now we had a bullish channel breakout with bullish strength behind it, and immediately starts climbing. Alrighty? Especially when you are trading a breakout trade. No matter what type of trader you are, whether you're using the VSI or not. Another general principle. If you're trading a breakout, it's a breakout. It should accelerate very quickly. Now, using the VSI, what we're doing is we're enhancing the probabilities of success because we're adding a confirmation tool, or we're adding additional factors that need to be triggering in order to say this breakout should follow through very quickly. But generally speaking, any setup that you trade, any breakout trade you take, should follow through fairly rapidly. Alrighty, so keep that in mind. Now, here's another example. This is the VSI Pro Regression Entry. Once again, this is on NVIDIA. This is on a 5-minute price chart for those of you looking intraday. No problem, Albert. Have a good one. And what happens here? We went from bullish as we were climbing, and then we changed to neutral and bearish. Alrighty? And market, once more, you're looking at price action to set you up, and then you're looking at the indicator to confirm the setup. Well, here's our breakout through well-defined support. Indicator line is bearish. What happens? Immediate follow through to the downside, then consolidate into the close and drop once more. Alrighty. Making sense to everybody so far? Pretty simple. And again, a lot of you have said that you miss good signals because the market's moving too fast and you couldn't do your analysis fast enough. Well, that's what we're trying to do, is solve that and make it very easy for you to quickly look at a setup and then glance down at the indicator and say, indicator confirms, take the trade. All right. That's what we're trying to do here, is increase the probabilities and your success rates by identifying setups quickly and making it so you can take action fast enough so you're not chasing the market and you can get in at the start of the move instead of the tail end of the move. Alrighty? No, Ross, it works alongside them. Alrighty? No, this is members. We'll do the member pricing tonight. So, Apple here. Alrighty? One more example. This is Apple on a daily price chart. We had a well-defined pennant pattern here first. Once more, again, we just left the 30, 15, 15 settings. We haven't changed that for this strategy. And we're breaking down with bearish indicator line, confirming the setup. Breakdown runs very nicely. Goes back into consolidation once more. Once more, we break out to the upside with bullish indicator line. And even when it pulled back here and retested broken resistance, now support, it still had bullish indicator line and continued to climb. Now what's happening is we've gotten up and our indicator line is starting to weaken. So you'd want to be being careful with it, is essentially what it's saying. All right. This making sense to everybody? I hope it is helping. So how many of you have learned something in today's presentation? Because I would like to see, just show of hands, who here is learning something. Because I always, like I said, I want to make a difference. Sure, Dave, we'll look at some currency pairs here in just a minute. Like I said, I'll pull up some live charts and show you whatever markets y'all want to see. Can you guys see just how effective the VSI is for helping you avoid the pain of those false breakouts, the failed trades, timing your entries correctly, and staying out of those choppy setups? All right. Now, I also want to say something else here. You need to have, when you are trading, all right, a lot of people come in and they have these dreams of, I'm going to be the world's best trader. And dreams are good, okay? Dreams are great for you. It gives you something to work towards and strive towards. But alongside your dreams, you also need to be having goals, okay? You need to have goals, and you need to be having achievable goals. And the way that you achieve these goals and in turn achieve your dreams is you got to have discipline and consistency. You can take the best tools in the world and the best education in the world for any trader out there, and if you don't have discipline and consistency, you are not going to be successful, and they're not going to hit their goals, and you're not going to be a trader that achieves their dreams, okay? That's what leads to success, not just in business, but really in not just in Forex or in trading, but in every part of life, is the consistency and discipline to actually achieve the things that you set out to. Alrighty? And you can make that happen if you actually decide and make that decision. You know what? I'm going to do it. And this, once more, it doesn't matter about, this doesn't have anything to do with trading the VSI at all. This is just in general. I will always want to give you as much knowledge as I can. Don't just assume that because you're going through the motions that you're going to get there. Because I talk to traders all the time that they'll be sitting there and they go, yeah, you know what, Thomas, I think it's time to make a change. I've been trading now for 10 years and I'm still trading water. I haven't made any progress over the past 10 years. Do not be that person, okay? Don't just assume because you're sitting in front of your computer every day watching the markets that you're going to, one day it's going to click and you're going to become the world's best trader. It doesn't work that way. All right, you need to have a goal. You need to have a plan. You need to be following it. You need to have rules that are effective, that you can follow, that are in place, and then you have to have the discipline and consistency to actually do it. All righty. So who wants to hear a little bit more about what's coming up in the workshop? Because this is going to be an awesome workshop. It's going to be the best energies workshop we've done. And who all would also like to hear a little bit more about how you can get the VSI? Because I'm pumped to go over this stuff because that workshop's going to be a blast, and the VSI tool is one of the best tools we've come up with here recently. For those of you that are going, no, you're just trying to sell me something. I literally just gave this indicator to my father. Okay. So there's no way in the world I'd be telling my dad to go use it with his trading if I didn't believe it worked. Now he gets a little bit better of a discount. He gets the I'm your dad discounts free. But let's talk about mastering the energy trading in VSI Pro workshop, because this is coming up here at the end of the month, or actually beginning of October. So it's a 2-day workshop. It's going to be taught by myself, Dave Aquino, and Drew Day. Drew's the founder of our company. And Drew, he'll show you some more, or I'm sure he'll show you in the workshop and stuff, some of his broker statements from the fund he was trading, or fund that he was a part of, where he has $4 or $5 million months and days. Okay. And we'll show them to you. It's pretty neat. It's good stuff. But it's going to be a 2-day workshop covering fundamentals, technicals, futures, options, day trading, and swing trading. So there's going to be a lot of stuff covered, and this is a great time to be trading the energies. We had some awesome opportunities with trading the energies the past month or so, especially with the way the hurricanes have affected the markets. I know it's terrible what's happened with the hurricanes, but you need to understand how these types of events affect the markets, because you're having, in the energies, for example, in gasoline and heating oil, you're having $4,000, $5,000, $6,000 swings per contract in a day. Okay, really big moves are taking place, and if you know what you're doing and know why things are happening, and understand the driving forces behind them, you'll do better and be able to actually take advantage of it yourself. So, also we're going to be covering VSI and how you use the VSI with your trading and how that can help you, and go in a lot more detail. But it's going to be 5 or 6 hours worth of training over 2 days, a lot of stuff. So now I got another question for you before we go into how you get the VSI. How many of you know that with your trading, you come to these types of webinars and you go, wow, this looks really great, and this looks like it can work, this looks like it's awesome, but then you sit on the fence and you never actually make a decision. And you go, but you know what, I think I'm going to mull over it, think about it. I don't care if you come in and you say, no, it's not for me, perfectly fine. If you go, Thomas, this is great, I'm ready to jump in, I'm excited for this workshop, I'm pumped to take my trading to the next level, excellent. That's also great. But if you're the type of person who goes, I don't want to, I'm kind of in the middle, and I don't one way or the other, I'm lukewarm. You need to make a decision, because again, if you don't have dreams, you don't have goals, and then you don't have the discipline and the consistency to get there, you're never going to hit those goals. And I don't want you to be the person that looks back 10 years from now and goes, I never changed. I just spent the past 10 years of my life trading and didn't do anything with my trading. It never got better or worse or anything else. That's the worst possible outcome. So let me tell you about the indicator. It's the VSI Pro Indicator. What we're doing tonight, we're doing a bundle, and we're actually going to be giving away a laptop for everybody that purchases in the next hour. So VSI, or entered to win a laptop, I should say. You're going to get the VSI Pro Indicator, which is normally going to be $997. You're going to get the workshop trading Q&A. Okay, outside of the energies workshop, we're going to do another session on one day where it'll be an hour or so long, and it's just going to be an intensive Q&A where you guys have had the indicator for a month, and you're going to come in and say, all right, Thomas, I've had the indicator, answer these questions. Why was it working here? Why wasn't it working here? What do I need to do better, etc. All right. Then you're also going to get the Mastering the Energies workshop, which is taking place October 4th and 5th at 7 p.m. Eastern. All right. Normally, it's going to be about $2,200 worth of stuff. But today's price, we're doing it for $497. So you're getting all of that for only $497. The workshop by itself is worth more than that, in my opinion. Alrighty. Now, you can get that. All you got to do is go to bctnow.com/VSI. Again, bctnow.com/VSI. And as I mentioned, if you order the next hour, you'll be entered to win the new laptop. It's going to be a trading laptop that you can use your indicator on and all that stuff. Now, if you need help, all you got to do is shoot us a message at support@basecamptrading.com or give us a call tomorrow at 919-935-0010. Now, once you go to bctnow.com/VSI, this is where it's going to take you. And again, I'll do a Q&A here. There's a lot of questions coming through. I'll do a Q&A and pull up some live charts here in just a minute. But the VSI Pro Indicator, alrighty, it's going to bring you to this page right here. All you got to do is fill out your information and complete your purchase. You can see it's $497 right there. So first name, last name, email. Make sure you put in the right email. We have people coming in and they put in a fake email because they go, well, I don't want everybody having my email. But then they go, well, I never received my indicator or access to the workshop. It's a virtual company. You got to keep that in mind. We're online. Everything we do is via email. So if you don't give us the right email, you're not going to be able to get it. Now, I know there's some common questions that you guys ask all the time. And the very first one that always comes up is, what platform is it available on? So let me answer that for you. All right. And again, I'll be doing some live charts and Q&A here in just a minute. So just hold tight. But the indicator is on TradeStation, Thinkorswim, which is TOS, eSignal, Sierra, Infinity, Multicharts, NinjaTrader. All righty. Yeah, Ellen, shoot us an email. Yeah, Andre, shoot us an email. Yes, Kurt, shoot us an email. That is, so you are buying the indicator for $497. We are throwing in the workshop as a bonus because, like I said, we believe right now is an excellent time to be trading the energies, whether you're trading options or futures or equities. It doesn't matter. The workshop is recorded and you'll have access to it. So once again, you're getting the VSI indicator. All right. And then as a bonus, we're throwing in the workshop because now is a great time for energies. And we want to help you as much as we can with the energies and with knowing which markets are good, right to be trading. All righty. You're getting the indicator for $497, plus we're throwing in the workshop, plus we're throwing in the Q&A all together for only $497. Okay. If you need help, support at basecamptrading.com or 919-935-0010. Once more, the link is bctnow.com/VSI. So let me go ahead and we will pull up some live charts here and take a look at different markets so you guys can see kind of the indicator in action. So here we go again, bctnow.com/VSI. Let's take a look at the markets here. This is crude oil. This is Friday. This is on a 240-minute chart. Alrighty. And the reason I'm going to show you three markets first, because at the beginning of the day, I was telling you it worked perfectly on Friday for three different markets that we were trading in the trading room, and they all played out just like we want to see. Alrighty. First one was crude. Now, we have, not only did we get the volume reversal here, you can see the dots, you also had the bearish divergence. Why was it a bearish divergence? Because prices were equally as high just about, but indicator lines significantly lower. Now, what else did you have? When we broke out of the pennant pattern, what color was the indicator line? When we broke out of the pennant pattern, indicator line was bearish. So you also had the confirmed breakout, the regression confirmed breakout. Worked out perfectly. The other one we talked about on Friday was gold. And again, I run the futures trading room because I trade futures more than anything else. Once more, gold extended to the upside with a volume reversal. Now, what is the trigger for a volume reversal? Shoot us an email, Dale. The trigger for the volume reversal, it has to break the previous bar's low, and this is why. Because you see, you first got your volume reversal right here, and it never triggered, and then it continued to climb. never triggered. Climbed again, still never triggered. Then it started to stall, still had the volume reversal active, but never triggered. And then it triggered, and as soon as it triggered, what happened? We accelerated straight down. Okay. The next was bonds. This is 30-year bonds. Same thing. Extended here, volume reversal, never triggered. Once more, volume reversal, never triggered. And then lastly, volume reversal, and then it triggered. And what happened? Accelerated straight down. You can also see right back here, it had a textbook volume reversal right there. I mean, look at how well this works in bonds, by the way. It just tickles me. I love it when strategies I come up with work. Like I said, I don't ever sell anything unless I can test it with real money and make money with real money. But we had the volume reversal Friday. The last time you had a volume reversal was right there, and it pulled right back down. And the time before that, you had a volume reversal was right there, and it pulled right back down. Yeah, it's bctnow.com/VSI. So, yep, it triggers when it breaks the previous bar's low. So how the volume on the VSI Pro Indicator differ from the volume dots on the VBT squeeze zero line? Good question, Joshua. The volume reversal is looking for kind of the exact opposite of what VBT is looking for, a volume confirmed breakout. VSI is looking for a decrease in volume compared to what the volume was when the market was rallying. Does a dot print intrabar or at the close? It should print intrabar, but you got to keep in mind, it's not going to stay, it's not locked in because you don't know what the volume on that, total volume on that bar is going to be until the bar comes to a close. So at one point, when it first starts, it'll probably signal, hey, it's a volume reversal, but it's not confirmed until it actually closes. Does that make sense? Because as time goes on, more and more volume is going to build, and you could have somebody come in with a huge position that drives volume way up. Alrighty. Can we look at Apple? Sure. Here is Apple. Wow, that actually looked really, really good. Bullish volume reversal. Bullish volume reversal with bullish divergence. Nailed the bottom there. Bearish volume reversal here. Didn't trigger. Bearish volume reversal here. Triggered and dropped perfectly. Bearish volume reversal here. Triggered and pulled back. Same thing here. Triggered and pulled back. And we got to the upside, extended, and now it started to retrace a little bit here. Bull and bear flag indicator is looking for bull and bear flags, which is 100% different than this. Glenn, it'll still be $4.97. So you might as well, it's the price of the energy workshop is $4.97 by itself. That's what it's going to be when we do whenever we do a special for it. So you might as well get the indicator for free as well, or look at it the other way around, get the indicator and get the workshop for free. Just signed up. Guessing the webinar will be recorded. Absolutely, Mike. Good deal. Glad to have you with us. Yes, there's a huge difference between VSI and MQ momentum. MQ momentum is looking at, it's a momentum oscillator. That's the only thing that's really similar, but the MQ momentum is looking at two indicator lines oscillating above and below zero and then displaying the spread between the two indicator lines as the histograms, showing you the strength of a move. VSI is looking at volume and looking at overbought, oversold conditions, as well as momentum indicator line. I use both VSI and MQ momentum together. Sorry, there's a lot of questions going through here. Michael, it is $6.97. In Energies Workshop, different than what is included in the Everest training. The Energies Workshop is going to be an add-on to, if you're in Everest, you'll get the workshop for free. You don't get the indicator if you're in Everest, though, because it's with Apple. Some traded below the prior bar, but did not close before the prior bar. Are you waiting for a close below or above the prior bar? Nope, it just needs a trigger. What's the difference? It just needs a break, and that triggers. VBT is a compression breakout tool. VSI is it's looking for an extended market. What time of day is best to use the indicator? when the markets are most active as usual? Yeah, Tim, most things are best to use when the markets are most active, but it really depends on the time frames you're analyzing. I mean, on a 5-minute chart, I wouldn't want to be using it at 1 in the morning or middle of the night. On a 240-minute chart, though, if it triggers, then you're looking at a bigger move that's taking place, so it's perfectly fine to use it that time. Tiong, if they're a friend of yours, tell them they can, but non-members, we're going to do a different webinar. Can we look at the S&P? Sure. ES. Here's a 5-minute ES. You don't want to see what's happening right now. It's gotten extended, obviously, because it just gapped way up. Hasn't really done much here, though. You had volume reversal right there, textbook. Volume reversal right here is cinch into retracement. And then you just had extended markets right here and right here, which both retraced pretty well also. Irma affected bonds. Can you explain how Harvey and Irma have affected the energies, especially bonds? Mike, I did a webinar, or not a webinar, I did a video, a free video on the YouTube channel about Harvey and the energies. If you want to go watch that and learn a little bit more about it. One of the things that has caused bonds to gap down today and indices to gap up and gold to gap down, we just opened here at 6, was the fact that it wasn't quite as powerful as they were anticipating, which is better for our economy because we're not having to spend billions of dollars repairing, or as many billions repairing the infrastructure. By energies, are you talking about commodity markets like gold and oil? Not gold. For energies, we're talking about crude oil, gasoline, heating oil, natural gas, that type of thing. And we'll also be discussing things like USO and ETFs and stocks that are related to energies. Can you see soybeans? Sure. At soy, and you said you want a daily price chart of soybeans. There you go. Had a volume reversal to the upside over here, and once again, never triggered on the way down, which is why, again, there's always 2 parts to a trade setup. It's got to trigger. Once it does trigger, you bounce right back up. Then once more extended to the downside here, and that triggered, bounce right back up. Extend to the upside here, wait for it to trigger, triggers right there, pulls right back down. Worked out pretty darn good if you ask me. Can we look at URTY? There you go. Hasn't done much. So if you see a market it's not fluctuating enough, it's not getting extended, it's just in consolidation basically, but you still want to use it. You change your length to a shorter length, and I'm just guessing. There you go. Use a 9 length, and that looks beautiful now. I mean, perfect. Volume reversal there, volume reversals here, volume reversal here, and then same thing plus a divergence there. That worked excellent. Hey Scott, yeah, shoot me an email, man. It's been a while. How's it? Can we look at USO? Sure, because that's what we're going to be talking about in the workshop. Absolutely. Here's USO, and let me change the settings back to default. Not too shabby. Reversal, extended volume reversal here, and went into consolidation. Extended volume reversal here, reversed very strongly. Same thing here, reversed very strongly. Same thing here, reversed very strongly. So I mean, that worked perfectly. The indicator is available tonight. If you go to bctnow.com/VSI. You can get the indicator now. You can download it tonight. You can start using it within an hour. Yeah, again, bctnow.com/VSI. That's going to get you the indicator, which it's available on TradeStation, NinjaTrader, MultiCharts, eSignal, Thinkorswim, Sierra, Infinity. Am I missing anything? NinjaTrader, MultiCharts, Sierra, eSignal, Thinkorswim, TradeStation. Yep, that's it. It's also going to get you, it's also going to get you the Mastering Energies workshop on October 4th and 5th. at 7 p.m. Plus, it's going to get you the live training. Plus, again, if you order it within the next hour, well, I should say the next 45 minutes, you're going to be entered for the drawing for the new laptop. The drawing is going to take place at the end of the month. Yes, Jeffrey. Yes, Richard, shooting an email to men. Regression length, and I forgot what the A stands for, Joshua. So when I come up with strategies, I don't know how to code them. I know what I want them to do, but I don't do any coding. So I'll tell our developer, and when he puts it all in there, he'll mark a name so he remembers, and that's just what he marked for it. I don't remember what he said the A stands for. Can we look at IBM on the dailies? Sure. Let's take a look. We'll do a couple more here, and then that is going to be it for tonight, because my wife is waiting for me for dinner. Here's IBM on the dailies. Now, the other thing to keep in mind, this is a good example, because this is dropping through the floor, okay, and running away. When you're triggering, remember, it should trigger and run. And if it triggers and then forms a bearish engulfing, like it did here, get out right away. And remember, I'm not sitting here telling you this is going to work 100% of the time, because it will not. Nothing does. But what it will do is your gains, as long as you are disciplined with your trading, your gains should far outweigh your losses in terms of reward risk, which is what makes a good trading strategy. No strategy is 100%, but we can have a strategy that might be 60 or 70%. That's a 2-to-1 reward risk ratio, meaning we make twice as much on our winning trade as we lose on our losing trade. That's a darn good strategy and equals a very, very good equity curve. Joshua, I developed the indicator. I cannot tell you what the percent win is, because there's too many factors. I mean, you could say, what's the percent win on the volume retracement trades on a 5-minute IBM? Or you could say, what's it on a daily gold? From my experience, we've had about an 80% success rate on the trades I've been taking using it. Now, there's more analysis that goes into it, because I always trade price action number one and use indicators to confirm. But there's too many things to just say. In general, it has a guaranteed amount. Dave, can we look at the Euro US dollar? Sure. Here's the Euro US dollar. There's no vol. Now, that's a good question. So for spot Forex, there's no volume in Forex. So you cannot look at a Forex market and say it's a volume confirmed reversal. So keep that in mind. It's not going to give you that volume component, because there is no volume component. But the retracement line tests have worked really, really well for trend following. Can we look at RBOB? Sure. Here's RBOB. Working out beautifully. Volume reversals there. Volume reversal up here. Volume reversals right here. Extended market reversal there, and extended market reversal there. Not a volume reversal. This, by the way, is what Harvey caused. That rally right there was Harvey driven. You look at DRI. And again, I will look at, sorry, Maria. There's a lot of questions coming through. So if I miss your question, it's not because I'm intentionally ignoring you. There's just several hundred people in here and lots of questions coming through, and I'm picking them out as much as I can. Here's DRI. This actually worked out really, really well. Volume reversal there. Volume reversal down here. Volume reversals here didn't cause the complete trend reversal, just caused consolidation. Same thing here, didn't cause complete reversal, just consolidation. I've never been able to trade with volume bars, but this VSI is really easy to interpret with price. Yeah, Mary, that's one of the things I like doing, is taking stuff that's complicated and making it simple, easier to use. So orange juice futures. I have not looked at orange juice futures in years, to be honest with you. They're too thinly traded for me to want to mess with, because I could manipulate this market, and I don't want to trade a market that I can manipulate. But not too shabby overall. Not a bad move. Can we look at Amazon? Sure, Joshua. What pairs do you want to look at? Here's Amazon. Worked out pretty darn well, if you ask me. You look at EMD. Here's EMD. Not a lot happening. Again, if it's not getting extended, change your length. Here's the Aussie dollar. Again, no volume is in spot Forex, so you cannot use a volume reversal because there's no volume component. However, you can look at extended markets and look for retracements from extensions, and you look at your retracement line entries like these here to the upside or these here to the downside, because they all worked out really well. Can I look at a 500 tick? Miles, that's way too specific. It's going to take too long to get to something like that. A specific date and specific time frame, specific time of day during a specific date. Can we look at beans? Actually, that's September 6th, so that actually should have been last week. I'll pull that up here in a second. Oh, this is beans. We already pulled that up once, though. Here's bonds on the 500 tick. And this will be the last one for today. Here is the 6th. There you go. Or not any setups really, other than the breakout. And that breakout, again, was on the 30-minute price chart is what we were looking at it on. It also happened on, I mean, you can see the support on the 500 tick. Well, we traded that in the trading room. All right, everybody. I hope you enjoyed it. You said, thanks, Thomas. Purchased the VSI. Hope to have electricity by tomorrow. If so, I'll be in the room tomorrow. Good deal, Jay. Hope to see you there. Thanks, T. VSI is a winner. See you in the AM. Good deal, Ilea. See you tomorrow morning. If only you can continue your videos on stock and options. Not sure what you mean, Tiong. I do have a series on YouTube where I talk about stocks, equities, and momentum and price action setups there. We'll get any learning reference material for the VSI that we can refer to in the future, long after the workshop has ended. You'll get recordings from the workshop. And if you are a member, you can ask me questions every day. I always try to answer as many questions as I can during the trading room. Thanks, Thomas. Me too. Signed on as well. Good deal, Scott. How do we download the indicator from BCT? Is it the standard way? Yeah, Richard, it should work the same way. Thanks, Thomas. Got the indicator. Good deal, Mike. Got the indicator. See you in the morning. Good deal, Kevin. Looks like a great product. Thanks, Thomas. No problem. Other Kevin. Thanks. See you, Tim. Have a good one. Would like to see it with momentum in the room. Sure, AJ. You'll see it tomorrow. It's been in the room all week, though. I've been using it every day all week. Yes. But after I've completed viewing it, you need to continue. Come to the room and ask me, Tiong. I'll be happy to pull it up. I hope I'm pronouncing your name correctly, by the way. When is VSI available for MT4? Joshua, we don't normally code for MT4, but send a message into support and let them know that you're interested in it. We'll see if we get enough people that are interested in MT4. We can probably do it. Yeah, again, all you got to do once more, bctnow.com/VSI. If you want to be entered to win the new laptop, all you got to do is sign up in the next, you got 40 minutes left, or 39. He said, will I be sending you your new laptop to the home or business? We'll see. We'll do a drawing. The way we'll do it is we'll pull out all the names that purchased in the time frame. Then we'll use a RNG, which is random number generator, to generate a random number, and we'll select whichever number person that is, and then we'll contact you and say, hey, you won the laptop, here you go, and we'll let everybody know who the person is, and maybe we can get a picture with it or something. Bakul, nope, this is the cheapest price you're ever going to get it for. And again, this, in my opinion, this is a stellar deal. It's the VSI indicator at half off, plus we're throwing in the free workshop because now's the time to be trading energies. And we're also throwing in the Q&A. Sounds good, Tiong. See you in the trading room then. All right, everyone. No, Fred, the Mastering the Energies workshop is not done several times a year. This is the first time we will have done this one. I did a previous Energies workshop a couple years ago, but this will be the only time we do it this year, and probably the last time we do an Energies one, because this should cover enough stuff unless something drastically changes in the Energies markets, which I don't see that happening. So thank you all. I hope you enjoyed it. Please be safe if you guys are in Florida. I know there's a lot of people in the room that are down in Florida. Be safe. Don't do anything crazy. I will. Yes, Ron, Dave's going to be using it. I'll see you guys in the room tomorrow morning. Have a great rest of your evening, and I will see you all tomorrow. Until next time, happy trading, everyone.